What's going on, everybody? This is Maurice Wright. I want to welcome you to the channel, Market Insights, where I try to help everybody who's just starting out getting investing, try to make sense of these markets. So let's take a look back and see how much money we could have made had we invested $10,000 into two different stocks. First one I'm going to start off with is CrowdStrike. This is a cybersecurity stock. And if we go back and look back in April the 13th, this stock was trading for $58.15. Now I'm going to do a little math and divide 59 into 10,000. That would be 169 shares. By the way, I'm using TD Ameritrade's Thinkorswim platform. And this is the think back mode where you can go back in time and analyze what you could have done with certain prices of stocks. This is actually what we call a back test. So I'm going to put in here 169 shares. Now if we multiply 169 times, I'm going to round this 58.15 to 59. That would give you 99.71. Now what I'm doing down here is I'm simulating a trade if we would have had 169 shares. It would have added up to $9,971. Let's look at how much we would have had today if we would have held that stock. Your gain would have been $14,435. That's not including the 9,971. 14,435, 98 plus 99.71. 24,406 would have been your total after subtracting your initial investment. Next stock we're going to look at is the one that I'm using right now, Zoom Video. We're going to take the same look back, April the 13th. April the 13th, this stock was $124.51. So let's see how much $10,000 divided by 125 would have gotten you. 80 shares of stock. So we're going to simulate owning 80 shares of this stock. And then multiply 80 times 125. That would have been your whole $10,000 investment. Now let's look and see how much that would be worth today. Your gain would have been 29,460 without the 10,000. So adding the 10,000 to that, your account balance would be 39,460. Now, the reason I went through that is to show you how much money you could actually make in this market if you choose the right stocks at the right time. Now what I'm going to do is I'm going to show you what you need to know to buy your stocks. The first thing you need to know is that when you're buying stock, one of the most important things to help you with that is to know how to read a stock chart. This is what a stock chart normally looks like. Down at this bottom right here is the volume, which is the number of shares traded each day in the stock. These lines up here are the prices of the stock traded for the day. The long part of the line is the range between the high and the low that the stock traded for the day. The line to the left is where the stock opened. The line to the right is where the stock closes. Now, the reason why you should know how to read this is because the most advantageous time to get into stocks is when the stock is moving up on heavy volume. If you can see here, this is an up move. This right here is a volume bar. And as you can see, compared to the other bars, this bar is the highest one. Now there's also chart formations that you should learn how to read in order to get into stocks at the right time. Now I use two different time intervals for my stocks when I'm looking at charts. I use a daily chart and I use a weekly chart. The daily chart is mostly just to keep track of the prices day by day. But if you look at a weekly chart, it takes out the daily swings up and down and gives you a clear picture of what direction the price the stock is moving in. And it also gives you a clear picture of the volume that's traded in the stock for the week. Now, the importance of the volume in your trading is that you're following the big institutional investors that are investing in stocks. And the reason that you want to do that is because the big investors are the ones that move the price of the stock. People like you and me, we don't have enough money to move stocks the way they do. They invest millions of dollars. And so by reading stock charts, you get to follow the money. And when you get good at following the money, it will increase your chances of making money once you buy a stock. This is an example of a cup-shaped form in your chart. And the basis of this formation is to let the stock run up, start its way down, go sideways, and then move back up again. This is basically what we call in charting support and resistance. The stock goes up, hits a resistance point, comes back down, and then comes back up to the resistance point and then blows past it. Now, there's some people who don't believe in investing in stocks by watching charts, and I don't solely invest in stocks while looking at charts, but the charts are the first things that catch my attention. Now, once I look at a chart and I see what I like to see as far as the formation going and the volume, then I go back and I check the fundamentals and look at the earnings for the stock and then make my decision on whether I want to invest in the stock. So this chart right here is what's known as bullish chart patterns. And the two most, I would say, used chart patterns in charting are the cup with the handle and the saucer base. Now in this illustration, you'll see how stock runs up 30%, comes back down 35%, starts going back up, goes sideways to slightly down for at least 1 week, and then starts to come back up. Now this BP right here is what they call the buy point, and that's when you would get into the stock before it makes its move up. So I'll leave this up here for a minute just so that you can look at these, because a lot of your charts that you'll look at, you will see all of these patterns before the price of the stock goes up. And if you can recognize these patterns in your stock charts, it will make it a whole lot easier to know when to get into a stock that you want to buy and have a higher probability of making money once you do get into the stock. When setting up your chart to look at these, one of the things that you'll have to make sure you do is click on this bar, OHLC, which stands for open, high, low, close bars. Which just shows you the price that the stock opens at, the price that it closes at, and then the range between the high and the low for the day. Now, once you've looked at a chart, found out what patterns you're looking for, your volume, your price spikes, and the direction that the stock is heading in, which you always want the chart to be going upwards. The next step would be to start looking into the financials of the company. The main reason why large institutions and investors invest in stocks is because of earnings. The more a company makes, the more the company is worth, and the more the company is worth, the more the stock price is worth. And what you want to see are the company's earnings going up every quarter. If we take a look here from barcharts.com and look at Zoom, back in December of 2019, Their earnings came in at 9 cents per share. March of 2020, the earnings came in at 15 cents per share. June of 2020, earnings came in at 20 cents per share. And August of 2020, the earnings came in at 92 cents per share. Once you see the price of your earnings going up consistently every quarter, the stock price should follow the earnings. I use a number of different websites to do research on my stocks. I mainly use my TD Ameritrade's Thinkorswim platform to scan for different ideas on stocks and to look for charts. I use barchart.com, and I also have a paid subscription to Investors Business Daily. Now, when I'm trying to look for earnings in a company, I get the best information from Investors Business Daily. Now, you can get free information from barchart.com and from Yahoo Finance, but I'm used to using Investors Business Daily. And what I like to look for are earnings per share, which is EPS, annual return on equity, sales, and debt, and also pre-tax margins. Now, as far as pre-tax margins and return on equity, I like to see both of these above 15%. Earnings per share and sales growth, you get the most movement in your stock when these two categories are at least 25% or above. And as you can see, with their EPS over 1,000% and sales over 355%, there's no wonder why the stock has been moving up the way that it has. So remember these numbers when you're looking for your company fundamentals. Earnings per share, at least 25% or above per quarter. Sales growth, over 25% per quarter. Return on equity, at least 15% or more. And your pre-tax margin, 15% or more. Debt, I like debt to be zero, although most of your growth companies will have to use some form of debt in order to grow their company. It's also very important when looking at stock charts to find out how much your stock trades every day, or its average daily volume. And the reason this is important is because most of your stocks that go up, they go up on higher daily volume than usual. And what you would like to see is a volume percentage change at least 30% above normal average volume. When you see that, that's normally when the stock is breaking above a resistance and going up. As you can see in this example right here, the volume was 23,468,000 for that day as the stock was moving up. And his average daily volume was 10 million. So that's twice the daily volume. And that's how you follow the money. So let's go over what we learned for today. One of the things that will help you in your investing is learning how to read stock charts, how to recognize patterns on your chart, how to spot spikes in volume when the price is going up on higher than average volume, more than 30%. We're going to check the earnings of our company, check the average daily volume, check your earnings per share, over 25% a quarter, your sales, over 25% a quarter, your return on equity, over 15%, your pre-tax margins, over 15%, and as little debt as you can get. If you can get these small things down and remember them, this will greatly improve your stock investing. Took me a while to put all these things together, but once I did, it helped me out a lot. And also, if you're planning on trading options, this will help you even more by recognizing when a stock goes up and goes sideways, and just before it starts coming out of its pattern, how you can jump in with a stock trade and benefit as the stock is going up. Now, one thing that I'd like to note is that most institutional and bank investment companies don't invest in stocks that are below $9 or $10 a share. And the reason for that is because they invest millions of dollars. And if they do that in a stock that small, they can be charged with stock manipulation, making the stock go up and down. So normally, unless you see a stock below $10 a share doing, I would say, over 10 million shares per day, I wouldn't advise getting into those. I know a lot of people would like to get into a stock that's low, buy it, and then hope that it goes up. But for most of your institutional investors, they won't touch small stocks like that. And if they don't touch them, I won't touch them. And with option investing, recognizing your chart and knowing when the price of the stock is going up and then going back down will help you with counter trades as far as buying puts or selling calls. Now, one thing that I didn't mention, I told you all about how to recognize when to get into a stock when it's going up. Now I'm going to tell you how to recognize when to get out of a stock when it's going down. When you get into a stock, you would like your stock to run up at least 20 to 25% before it comes back down again. And what you would like to do is set a hard rule that you will not stay in a stock that goes 10% below the price that you paid for it. So if you jump into a stock up here and it starts coming down hard on heavy volume and it breaks below 10% below the price that you paid for it, you should get out of that stock and either wait for the price to go sideways and consolidate and then go back up again and then jump back into it on heavy volume, or just switch to another stock. And a good practice to have is to get at least 10 stocks on a watch list that you're constantly watching and that you know the fundamentals of the company, so that in the case that a stock that you get into goes down, that you can get out of that stock and already know what your other stocks are doing, so that you can get into another stock that you're watching and have a better chance of making your money. Now, I had a question today about where to look for ideas to invest in stocks. Well, one of the free ways that you can look for ideas is to go to barchart.com, scroll down to market leaders, click on this full list, and it will populate a list of stocks that you can go through and click on. And it has a list of 200 stocks. So this is one area where you can get some good ideas from. Another place that you can use is Investors Business Daily. Now, I have a membership with them, but before I started paying for a membership, I was using this site to watch the stocks on the move. These stocks are usually the stocks that they screen through that have good earnings and a high percentage of volume change. And this is what you're looking for when you're looking for stocks that are going up that you want to invest in. Now, you still can subscribe to this website for free, and they even have articles that they'll send you once you subscribe to their site that will give you a better understanding of what these companies do and their competition. Well, that'll be all for this video. In the next video, we'll go through some options trades that I'm doing. So So until then, everybody stay safe, and I'll see you on the next recording.